With the end of 2009 right around the corner, it is not too early to start thinking about taxes. There are some things you can do right now that could give you some real savings come tax time. Our financial contributor, Mellody Hobson, president of Ariel Investments, joins us live from Chicago with more on that. So let's get started with tax breaks and tax breaks on your car. There's some things you can do there, right, Mellody?
Yes. Okay, so December is a great time to buy a car for a host of reasons. First of all, we know that the auto industry hasn't been in a real slump, so they are motivated sellers. Secondly, they want to get those 2009 models off the floor to make room for 2010. But thirdly, the deal gets even sweetened a bit more with a tax incentive. So if you buy a car, a light truck, a motorcycle, or motorhome, you can actually deduct your state or local sales or excise tax from the price of the car. So, for example, if you buy a $30,000 car in Chicago, that's a $2,500 deduction off your tax bill, which makes the car more affordable.
Are there any constraints here, though?
Yes, there are some constraints. So first of all, you can only deduct the first $49,500 of the purchase price. So if you buy a car that's more expensive than that, you can't deduct any more of that sales or excise tax. Additionally, there are some income limits. It's $135,000 if you're a single filer, $260,000 if you're a joint filer. Now, the good news is those are big income numbers, so that's most Americans would comply here.
A lot of parents, of course, are saving to send their children to college, and tuition getting higher and higher and higher. What do they need to know from a tax perspective?
Well, you're right, because tuition has certainly outpaced inflation over the last few years. A private university or college in this country costs about $14,000 a year. A private school costs in the neighborhood of $34,000. So these are huge numbers. Now, the government has tried to help, and they had the Hope Credit before, which allowed you to deduct up to $1,800 of college expenses. The great news is they've sweetened that with the American Opportunity Credit. That's expanded to include more people who make more money, as well as people who pay no income taxes at all, which is great. So now an individual like a student or their parents who are helping them pay for college can get a deduction of up to $2,500 for tuition, books, lab supplies, software, all sorts of things. And you don't have to itemize to get this deduction, although I would recommend keeping your receipts.
That's good to know. We've been saying, Mellody, a lot about these tax credits for appliances that are energy efficient and home improvements that improve the energy efficiency of your home. How exactly does this work?
It's all a part of the Reinvestment and Recovery Act, which was the stimulus bill from last year. And basically it said that if you make your home more energy efficient, you get a tax break for it. You can actually deduct up to 30% of what you spend, capped at $1,500. So that's everything from putting more insulation in your house, repairing a roof, buying an air conditioning unit, and you can take that tax credit in 2009 or 2010. But if you want to get it for this year, you need to make those improvements by January 1st.
Okay, by January 1st. Of course, between now and January 1st, it's the holidays and everybody wants to relax and not really think about too much. But you're saying these are critical days at the end of end of the year to get ready for April.
I know it sounds like I'm being a bore or a Grinch to start thinking about taxes, but really the great thing is the more you can get yourself in order, the more time and energy and money you will save when you're filing next year. So the U.S. government audited 1.4 million people in 2009. That number is expected to go up in 2010, and that costs money when you get audited.
Sure.
So the best way to get around it is make sure your paperwork is intact, and we're now going to start receiving all these tax receipts in the mail for our investments, 1099 forms, and for interest that we pay perhaps on our mortgage. So you want to make sure you really, really keep good records so that you will be all set when it's time to file.
And I know you want to tell us about our flex spending accounts. You always do this time of the year.
Yes, so many people have flexible spending accounts where they put pre-tax dollars into a healthcare spending account at work. The thing about those accounts, you use it or lose it. So if you don't spend the money you have in it by December 31st, it's gone. So you want to call your human resources office and check and see how much you have. And if you have money left, consider going to the doctor, buying some Glassic, or just buying some over-the-counter drugs at your pharmacy, replacing things that are going to expire.
Use it or lose it. That's your battle cry. Mellody, have a great day there in Chicago. Thanks so much.
Thank you.
And if you want to save money on your taxes, go to abcnews.com and click on GMA to get the full list of Mellody Hobson's last-minute money-saving tax tips.